Welcome back, my awesome people. So in today's episode, I will be interviewing Will Rhind from Granite Shares. Now, Granite Shares, for many of you that may not know, is a leading ETF asset management fund. So I'll let Will talk more about it. So Will, can you tell us more about Granite, your core mission, the history?
Sure. No, absolutely. First of all, thanks for having me. Great to be on the show. Granite Shares is a ETF issuer, which means that we specialize in a specific type of investment fund called an ETF or exchange traded fund. So we issue those, we manage them, market them. And ETFs basically are funds that contain all different types of strategies. So you can have anything really in the ETF, from an asset such as physical gold to more exotic strategies on income or equities, leverage, etc. So as a firm, we manage about $8 billion, and that's across the US and European markets, where we're kind of active on all major stock exchanges.
Well, you know what? After looking into some of the research of your company, you definitely are not only just local, meaning North America, but also global, because I know you have started just a few years ago, a solid platform in Europe, which is definitely progressive. And so can you tell us a little bit more about some of your key products or key ETFs? Because I did see that you do have an Nvidia ETF. And as we all know, Nvidia right now is skyrocketing and probably going to take over the tech sector very soon. But yeah, so tell us more about some of your ETFs.
Sure. So we started the company really with ETFs around the commodity side. So we started with physical gold, and we have a gold ETF, ticker called BAR, BAR. And we expanded from commodities into income and equity strategies. But perhaps what we're most well known for now is we really pioneered a new type of ETF, a new category in the ETF industry, providing leverage on single stocks. So we started these leverage single stock ETFs about 3 years ago, and they've become really popular. And as you just mentioned, Jacob, that one of the most popular, indeed the largest leverage single stock ETF in the world, is our NVDL. Ticker code is NVDL. That's two times Nvidia. So two times long Nvidia ETF, and that's itself about 5 billion in assets. So incredible story, and really tries to replicate two times or 200% of the daily performance of Nvidia stock. And as you rightly pointed out, Nvidia has been an unbelievable story, and everybody has tried to get exposure to that particular stock. And for those that want to magnify exposure even more, the leveraged ETF, our leveraged ETF, has really become hugely popular.
Yes, exactly. And with the leverage, not only are you maximizing your gains, you're pretty much betting on these proven companies. So viewers, definitely take a look into it, because I've done my research and not many asset management firms actually even have Nvidia as an ETF. So this is a very, very unique management firm that is not only looking out for us average people, but I mean, who's going to spend, before the share split, who's going to spend over $1,000 on one share? So this is a much easier way to get in, especially if you're a person who enjoys the tech sector. And so, Will, how do you differentiate Granite Shares from other firms? So, for example, I know you just mentioned that leveraging is definitely one of your unique factors, but are there any other unique factors that separate you from the others?
I think that when we think about our place in the industry, innovation is really what we try and use to set ourselves apart from other firms. And when we think about innovation, that's providing products that are unique, or creating new products, new funds that nobody else has. So typically, when you look at our fund lineup, we try and offer something that's unique, and therefore, for investors who are looking for ETFs, what they'll see from Granite Shares are typically funds that they won't be able to get from other companies. And that's important, when you're an independent firm, where you have to be offering something that's different, something unique. So for most people, that's going to be the leveraged single stock ETFs, the long and the short of large companies like Nvidia, Coinbase, etc. But beyond leveraged single stocks, there's regular ETFs that also have unique twists that you can find just with Granite Shares.
And so, what would you say is some of the key sectors or industries? I know we've touched upon technology, but what other sectors do you foresee maybe in the next 5 years or maybe 3 years becoming the next big thing? Because right now it is technology. Maybe in the future it could be utilities, maybe it might be gas and oil, but in your personal and professional opinion, where do you see, what sectors do you see coming up that are probably the next big thing?
I think technology. I think you hit the nail on the head. I mean, because that's all about the future, and it's about investing in the future. And so for tech, and let's put it broadly, tech and healthcare tech as well, I think are really the two areas. The other area which gets a lot of attention is crypto. So there's a lot of interest in cryptocurrencies again. But I think really the two ones which probably we hear the most about is technology, and within technology is AI clearly, and then healthcare, and again the application of AI in the healthcare sector.
Exactly, because technology is pretty much seeping its way into every sector, whether it's healthcare, whether it's education, whether it's oil and gas, just even making things a little bit more efficient. Even if it may not be the main thing that they're working on, it at least will make things efficient, even if it's just scheduling or anything of that nature. Okay, thank you for that. So technology, as you know, my viewers, is the big thing now, but also in the next 5 to 10, maybe in the foreseeable future, it will always be the big thing because I mean, which one of us can actually live without the internet these days? So now in the next few months, as you know, the American elections is coming up, and I've spoken with many other CEOs as well who have kind of leaned towards more of a hoping for a Republican leader due to less regulations, less red tape. How does the elections, if it does, affect your company in any way? Maybe do you have to maybe change up your maybe management style or dealing with strategies? What are your thoughts on that?
So I think for us, I mean, that nothing really will change in terms of the investment strategies that we have today. It just might make some of them more or less attractive versus before. And so, for example, if there's a Republican president, that was last time clearly Donald Trump was president. That was good for stocks more broadly, good for the market. So you'd think that this time around, broadly speaking, that would be the same as well, and that the investing environment would be good and the stock market would do well. And we've seen a little bit of that. I think as the poll numbers seem to indicate more towards that outcome, that the stock market is sort of pricing that in to a certain degree. However, I think it just will depend largely on the policies that get enacted and whether they favor, which they inevitably will, certain companies or certain sectors over others. But I think one thing we do know for sure, Jacob, is that technology companies, in particular large technology companies, will largely be immune, from any sort of policy because they have such sort of dominant positions in their respective sectors. So I would expect that to continue.
Nice. Yeah, no, I agree with you because for many companies, politics may or may not matter, as you said, right? Maybe some sectors might be a little bit more favored compared to other sectors. But it's kind of, a 4-year cycle, right? So every 4 years is always that hope or that
Yeah,
doubt.
that's right.
Okay, so perfect. Thank you for letting us know on your thoughts about that because that does make a difference in people's investing strategies, right? A lot of people right now are hearing, "Oh, the market's going to crash, the market's going to crash." But when really, I mean, they've been saying that every year, they say that every few months, but you never know, right? The market is its own beast. So when it comes to your ETFs, who do you think leveraging is for? Is it for the average investor, maybe someone who's already invested? Who is leveraged ETFs for as the investor that you're looking for, like your target audience?
So I think it's a really good question. And first of all, I would answer that by saying it's certainly for people that are comfortable with risk. So it's not for everybody. And what leveraging does is when you talk about 2x Nvidia, for example, or 2x Tesla, you're providing 2 times the daily return of the stock, which is fine, or which is amazing if that stock goes up. But with 2 times leverage, you're not only amplifying gains, but you're amplifying the potential for losses as well. So if it goes down in a day in your 2x leverage, then you will lose twice as much. So it's really important to understand that and understand that, the risk and reward. And from that perspective, I think first and foremost, it's for people that understand leverage, understand risk, and are comfortable taking risk. And like any product, like any sort of investment that you'll do, make sure you understand how the product works and what kind of investment strategy that you're looking to use it for. So, I think, again, it's difficult to say, one particular category, but I think, what ties it together is people that are comfortable with taking risks, that understand the way leverage works, and the trade-offs involved.
I agree, because as they always say, right, if there's a chance that you can double your money, there's also a chance that you can lose double your money as well. And I think for many investors, because what I am seeing in the past, I would say 5 to 10 years, is this transition from single stock investing to ETF investing. Like when I'm talking to other financial people, they always mention, oh, I just open a new position with this ETF and with this ETF, compared to, 20 years ago was I bought Disney or I bought Apple. Now it's more of I bought this ETF that has Apple and Disney and other things as well. So I think with the leveraged ETFs that your company has, I think it's an amazing way to, of course, double your money. But as we said earlier, if you're investing in something like Microsoft or Google or, Nvidia, chances, yeah, you might have your daily losses here and there, but overall, they're always going to continue going up. So I think, viewers, if you really do look into it, if you're already invested in Apple and you already have Apple shares, why not double the leverage if you're doing well? Because, Apple is kind of not going anywhere. So Granite Shares, it's there for you right there. So with Granite Shares, I know you guys have a suite of amazing ETFs, but what are your plans for the next maybe 3 to 5 years in expansion? I know you've already expanded in Europe. Are you planning on maybe expanding into more international ETFs or maybe a different sector of a focus? What are your thoughts on that? Where are you guys going to go?
Yeah, I think sort of a couple of things. So one, continue to expand globally. So Asia is a big focus for us, and we're doing more things in Asian markets where customers or consumers in Asia really like leveraged ETFs. We're also expanding the product range that we have. So right now, we offer a good selection of leveraged ETFs on single stocks, but clearly we don't have a number of single stocks that people would probably be interested in. So we're trying to expand that range. We're also trying to expand into other types of product sectors. So, for example, things like income, where we'll be able to have ETFs that deliver specific amounts of income to people via option strategies, and then just other ETF strategies that we think will make sense for investors given the market environment. So, one thing I should say about the upcoming presidential elections is that it won't necessarily change what we have, or it won't change what we have today. But what typically happens is that if there are any big policy changes, et cetera, that provides sometimes a catalyst for new products. And that very well may be the case, that maybe a specific type of investment makes more sense if we have a change of leadership this year, and therefore it's normally an environment for new product development as opposed to what you have existing on the shelf.
Exactly. And those are the thoughts of many people, right? That things may not change drastically, but when policies changes, there might be new emergence of new products, new services, new companies. Because even, during our lockdowns a few years ago, there were so many companies that no one has ever heard of that were zooming to 1,000%, 2,000% returns. But then as soon as lockdowns were done, they kind of disappeared, right? But yeah, you're absolutely correct that it's not about changing what you have or changing your strategy, but it's more about adapting and adding more. Like I think the option strategy, the covered call strategy, because I know a lot of asset firms are also incorporating those type of ETFs into their portfolio, where they're doing a covered call strategy for like a Tesla, for example, or a Microsoft.
Yeah.
So viewers, these are all different strategies that firms are starting to take on to not only maximize gains, but also things that kind of make sense, right? For example, if you wanted to buy Apple, it's pretty expensive for the average investor. So as long as it's part of a collective in an ETF, then of course it's an easy entry. And plus, as we just said, keep saying it, Apple's not going anywhere. These tech companies are not going anywhere. So you can take a higher risk to maximize your gains. So Will, finally, I have to ask, what do you think about cryptocurrency? I know you touched upon it a little bit earlier. A lot of asset firms are creating ETFs. I know Purpose, which is one of these Canadian companies that has a Bitcoin ETF even before the spot Bitcoin ETF that was introduced this year. Does Granite Shares have any intention of maybe creating an ETF, or what are your thoughts about cryptocurrency?
Yeah, so we haven't got an actual underlying Bitcoin ETF. So we didn't end up doing that, although we did file for one very, very early, but pulled out of the race when the SEC or when the regulator sort of stopped people from doing it a number of years ago. The way that we chose to get around it, or to offer something, is to do levered ETFs on the crypto stocks. So one of our most popular ETFs is 2x Coinbase, and that's the CONL, or CONL is the ticker.
Oh, nice.
So that's a really interesting way to get a leveraged exposure to Coinbase, which, as you know, is a proxy for the cryptocurrency industry. In Europe, actually, we have MicroStrategy. So we have MicroStrategy as well as Coinbase and as well as Block as well, which was for a period of time people thought of as a sort of a pseudo crypto stock. So that's kind of been the way that we've chosen to address that for the moment. And I think we'll wait to see, what happens with Ethereum and whether we get Ethereum ETFs trading in the US market pretty soon. And then how, from the SEC, some indication on how the industry will develop. Because I think much like single stocks, that we would be very interested in providing more exposure. I think the gating factor clearly has been the regulator around allowing ETFs on different cryptocurrencies and the policy around cryptocurrencies more broadly. But I think if we got a sense that that was easing up and there was some more clarity around that, we might be able to do some more there. But for the moment, the way that we chose to do it and the way that Granite Shares investors are doing it is with these stocks and providing leverage on the crypto stocks.
And you know what? That's a really good point, because even though institutions are jumping on the crypto wave now, because I know a few years ago, no institution wanted to touch crypto. It was very risky. It was very confusing. Didn't know what was going on. But now they seem to be jumping on it. However, there is still not much clarity about it because it is still very, very volatile. And I know for investors, especially dividend investors, volatility isn't the best. So it makes sense for why Granite shouldn't jump into crypto just yet until things are more settled in, because the ETF regulation just came out this year. It will take some time for crypto to finally be understood. Some regulations and safety measures will finally be put around it, because it's still it is still kind of shifty these days. One major institution can pull out, which can tank the whole crypto market, which we've seen many times. So Will, that was amazing information. Really gave us good knowledge on leveraging and how this strategy works to my viewers. Now, before we end off, is there anything else that you would like to tell us about Granite Shares?
Yeah, so we are obviously with any ETF, ETFs are bought via brokerage platforms. So typically, you buy any kind of ETF from any major online broker. And the kind of interesting thing, I suppose, is you don't buy it from us directly. And just like a stock, they're bought and sold through brokerage accounts. So whether you're in the US or whether you're somewhere in another country, you're accessing the market via a broker. So from that perspective, they're very easy to invest in, just like in a regular stock. I think for more information specifically about Granite Shares, please come to graniteshares.com, which is our website. Find some good information on there. There's all the types of ETFs that we offer. And clearly, when it comes to leverage single stocks, the list of the stocks that we offer in our suite, and then the other strategies, obviously, around that. So graniteshares.com, and then obviously on social media, we're on Twitter, LinkedIn, usual places. But of course, if people want to ask questions or have any questions about it, then please get in contact with us.
Perfect. Thank you so much for that, Will. And remember, my viewers, as you've seen in my previous videos, I am a heavy ETF investor, especially when it comes to dividends, especially when it comes to underlying assets. So when you look at Granite Shares, think of them as an ETF with amazing underlying assets. I've said this maybe 10 times already in this video, but remember, these tech companies are not going anywhere. Nvidia, Google, Microsoft, Tesla, right? So these are going to be our future technology titans, as you would like to say. So if you invest now while things are still rocky, especially with the elections coming up, things are volatile, you might be able to get a good price, entry price, get in and sit on it for a while. Get the returns. Don't look at it daily. Look at it maybe once every few weeks. And hey, we will see where it leads us, because I am definitely investing in Granite Shares. So thank you for that amazing information, Will. Especially Nvidia. I am highly looking at that Nvidia ETF that you guys have. So my viewers, please like and subscribe. And if you have any questions, as Will said, go to the website, go to the social media, LinkedIn. If you have any questions and you want to ask me, please let me know. And until next time, stay ranting.